Good afternoon, everybody, and welcome back to Market Insights with Linux, and welcome to this new market overview today. The 2nd of May, it's the last week of April, kind of, and we got some economic data today, we got some earnings data yesterday that I wanted to speak about. We'll take a look at the S&P500, and we have to talk about, but that obviously all ties in together, we have to talk about interest rate cuts, all right? As most of you know, hopefully next week we have a Federal Reserve meeting. We hoped to see an interest rate cut during that meeting. That is very, very unlikely to happen. However, most people actually expected a rate cut in June, and I have some news about that, all right, which might have to do with the economic data we had today, might have to do with the economic data we had on Wednesday, obviously, which was quite relevant with the GDP data coming in lower than expected and PCE price index data coming in higher than expected, but we'll talk about that a little bit later in this video. And in general, my goal with this video is just to give you as much of a good overview of the markets today as possible. So let's get right into it. Now today, we do have some new earnings coming out by some oil companies mostly. I don't think these matter a lot. Unless you actually trade these companies, which I personally do not do. I also don't have active analysis on them. So if you want to read a little bit more about that, I would suggest looking up some other analysts for that. But we did have some data yesterday post-market. Apple and Amazon and Eli Lilly, all of them beat expectations. I mean, you can see across the board, you see a lot of green. And that's in line with earlier this week, that's in line with last week, and that's also one of the key reasons why we have seen and why we are still seeing a relatively strong S&P 500 and strong US equities. So that's great. However, the earning data in itself did not cause that much of price change. At least not for Apple and Amazon. I mean, Apple, of course, is at this point of time under quite a lot of pressure. And we saw that Apple actually opened lower today, while the general market opened higher. I do expect this to stabilize, but of course, Apple is one of the companies hit most with the uncertainty regarding the tariffs. Even though we have seen some ease of tensions between the US and China, that's all relative, right? I mean, the general situation is still very, very uncertain. And Amazon did manage to close slightly higher, but that is still very stable, and it seems unlikely to me that we will break above the general resistance level around 195 for now. Again, stability I do expect, but a breakout and an uptrend I don't yet. So that's earnings. Now, what I think is most important to talk about, though, is the monetary policy in the US. All right, like I said, we got some bearish data on Wednesday. Today we had some other data come in with the non-farm payrolls and unemployment rates, and that data was quite neutral. All right, unemployment rate came in at 4.2% as expected. Non-farm payrolls came in a little bit higher than expected, but the previous data was revised to be lower than we knew back then. Which means that kind of evens each other out, and that's why the data in general for the markets was quite neutral, and that's also why the general trend, which is an uptrend for US equities, has so far been able to continue. However, what we have seen, I mean, I'm not sure if most of you follow the Fed Watch, where you can actually see the probability of rate cuts for future Federal Reserve meetings. And what you can see there is that the probabilities, and you can only know this if you take a look at the probabilities quite often, which I personally do. And what you can see right here is that the probabilities for a rate cut, which would be this one in the middle, at this point of time, the interest rates are also at 425, 450. The chances of that are lower than 40% right now for June. Now, there's still a lot of economic data coming before June that could change this, but this has decreased. It was most likely that we would have a rate cut in June, and now it no longer is. Now it's most likely that the rate cuts would be the same then, which means no rate cut. And for May, like I said, it's almost impossible to get that rate cut. This is next week. We're not going to get that, but this is generally bearish. All right, and I don't think we've seen much of a reaction to this yet. That might also be the markets signaling that, there's quite a lot of time still before this actually comes. It shot up a little bit, by the way, in the last couple of minutes, but okay. So that's so it might provide us with some delayed bearish reaction, with a delayed bearish reaction. Excuse me, great English. But that's definitely something to watch. And for now, S&P 500 seems to be very strong. If we take a look at some other data, such as the volatility index, that's dropping down. Gold is also stabilizing. We found some support at the level we talked about before, but that's also no longer rallying, arguably even in a downtrend right now. And I'm wondering if I missed some news because of the volatility index dropping like this. But ultimately, the path seems clear for the S&P 500 to continue going up. Now, I do think high time frame, we're still at a major resistance zone. So do I think we can easily push through this level right here at 5,700, 5,600? No, I do expect a pullback relatively soon. But for now, the general trend for the S&P 500 seems to continue to be bullish. And I expect that to continue for now, unless we get some very bearish news or data. But that's what I think you need to know regarding the earnings, regarding the interest rate today, and regarding general news regarding the markets. If you do have any questions, anything, let me know down in the comments. Make sure to join our free Telegram channel as well if you want to stay updated on the markets. But for now, thank you for watching. Have a great day and bye.